Hey guys, today we're going to be talking about 3 powerful ways to get high win rate trades. And what I'm going to show you today doesn't matter whether you're a scalper, whether you're a day trader, whether you're a swing trader. This works on all time frames, whether you're working on the daily time frame, 4-hour time frame, 1-hour time frame, 15-minute time frame, or even scalping on the 5-minute time frame. So if you're looking to learn how to enter and exit trades like a professional, you are in the right place. The first way we'll talk about is just using simple price action. This is basically looking at what's happening in the actual market, looking at what the candles are telling you, and making a decision on when and where to enter based on what you see on the chart. This first simple way, we're not even going to be drawing any technicals. We're not going to be drawing any zones, any trend lines. We're just going to keep it super simple, just using straight up price action. Now, when it comes to price action, what we're going to be using instead are simple chart patterns. What do I mean by this? What I mean is we're going to be looking at different patterns such as a double top or a double bottom or a head and shoulders pattern or an ascending triangle or even a descending triangle. So these are the different patterns that we're going to be using along with price action to find an entry. And on top of that, because we're using price action, what we're also going to be doing is we're going to be looking at what the candles themselves are telling us. We're going to be waiting for what's called candlestick confirmations to give us a high probability setup that has a higher chance of hitting take profit than hitting stop loss. So what do we see right here? Right now, it's pretty straight and simple. We clearly see an uptrend, right? The market is creating what's called higher lows, and the market is creating what's called higher highs. The market is bullish right now. So what we can be expecting is we can be expecting higher highs and higher lows. So let's go ahead and allow this market to play out. So what we're seeing right now is the market has created a lower low than the previous low. Notice this low is lower than this one. So this is showing a potential sign of reversal, but we'll go ahead and continue to kind of see what the market is going to be telling us. So the market has created a lower high, a lower high, a lower high, a lower high, and from here, a low, a lower low, a lower low, and it's on its way to create another lower low. So at this point, the price action is telling us that the momentum has weakened and the bulls are less in control and the bears, the sellers, are a little bit more in control at this point. But we still need to find an area where we want to enter. So now what we should be looking for, we should be looking for a potential chart pattern. Now when it comes to chart patterns, you can have patterns that are continuation patterns, and then you can also have patterns that are reversal patterns. So in this case, since we're looking at lower highs and also lower lows, we should be looking for some type of reversal pattern. One could be a double top, or in other words, we could be looking for what's called a head and shoulders pattern. And pretty much what a head and shoulders pattern is, it signals weakness in the market and it shows a sign of potential reversal. So pretty much what a head and shoulders pattern would look like is we see a shoulder and then the market pulls a higher high, which creates what's called a head. And then the next low is usually equal to the previous low. And then we can expect the next high to be lower, which creates the right shoulder. And the market will then continue down, creating the reversal pattern. So we need to be able to eye these patterns as they're happening. So what we can kind of see here is we do see a shoulder, and then we do see some type of head. And then the market did indeed pull down to this neckline. So this is what we call the neckline. So what we can do is we can draw a potential head and shoulders thus far. So the way to draw these head and shoulder patterns is first you go to the left and you click on where it says patterns, right? And you find the one that says head and shoulders. You might have to modify the colors if you want the colors to be like mine, but the pattern itself is pretty straightforward, pretty simple. How you would draw this is you would find the first low that creates the head and shoulders pattern. So I'm going to mark this as where the pattern starts. And you can kind of notice that the market created a high, which created what's called the left shoulder. And then you connect the next low, which marks what's called the neckline. And then what do? And then at that point, you mark the next high, which would be the head. And then what do you do after that? Now we're going to look for the next low, which would end up being the other point to complete what's called this neckline. So we don't know how far down this is going to go yet. So we're just going to leave a placeholder somewhere over here. And once you have the head finished, now we're going to be looking for where the right shoulder could potentially be. And the right shoulder is usually always about level with the left shoulder. It could sometimes be higher. It could sometimes be lower. But we have to look at the price action when the price is approaching this area. And we also have to look at what the candlesticks are telling us as well. So I'll just go ahead and leave a placeholder over here for now. And then to finish and complete the head and shoulders pattern is we just kind of drag this down, and you can extend this to however far that you want. I just usually like to extend it to where the head and shoulders pattern began. But the most important part whenever we're drawing these patterns is to find an area where we want to enter not a buy, but instead a sell, because we're expecting, only because we have enough information now that this market has created a low to at least equal to this neckline, which could show a potential sign that the next high isn't going to be as high as this. The next high might create what's called the right shoulder. So first thing we need to figure out is how low will this even get? And then depending on how far down it gets, that's where we need to drag the right side of the neckline. So let's go ahead and continue. Okay, so the market swiftly pulled up. So we need to adjust the neckline to down here. And then the right shoulder just needs to get adjusted a little bit more to the right. So now we need to look for what the price action is actually telling us. So this right here, this is a very strong move up. This means the buyers are in full absolute control. So let's see what the next candle tells us. So the buyers are still in control, but if you look at the candle, this candle is smaller than this first candle. This candle is a smaller candle than this candle. So the buyers are losing a little bit of steam. This candle shows that they're losing a lot of momentum, and now these sellers are possibly in control. Why? Because as you noticed, this candle was initially fully green, and then it closed way down here. This wick, this long wick candle that you see here, shows a sign of potential bearishness. This long wick, again, shows bearish momentum. But we don't have any confirmation yet. Looks like the market is having a little bit of trouble breaching this high. So let's kind of see what happens. Okay, so these are all good signs for bearish momentum. Okay, so what I'm looking for here, I'm looking for a very bearish candle. This right here is a very good sign that the market is having trouble breaching this area. Why? Because the market tested this area once before and had trouble breaching this area. If you look at the wick, it is a very long wick candle. The market went down and then it's going back up, and the same exact thing happened. So this area is creating sort of a resistance to prevent the price from moving even higher. And in fact, this candle is a red bearish candle, and it is a shooting star candle. So if the next candle is also bearish, that would give me a candlestick confirmation to enter my possible sell. So let's see what the next candle shows. Okay, this is a very, very bearish candle. So this would be a point to do a entry. You would enter on this candle. Your stop loss should be above the wicks. And for the take profit, we can just do a simple 2 risk to reward ratio. Meaning for every dollar that we risk, we're looking to gain $2. So for example, if we risked $5,000 on this trade, meaning if you got this trade wrong, we'll lose $5,000. But if you get this trade right, we're looking to gain $10,000. That is a risk to reward ratio of 2. So let's go ahead and continue. So there we have it. So the first trade, smashed take profit. And let's kind of recap what we did so far. So first thing we did, we saw that the market was indeed in an uptrend. We're looking at price action. And the next thing we noticed is the highs should have been creating higher highs, which they did. And the lows should have been creating higher lows, which they did. But the issue came about in this area. You'll notice that the highs at this point have been creating lower highs, lower highs, lower highs. And then the lows have been creating lower lows, lower lows, lower lows. So that's a sign of potential reversal. So this is where we need to start looking at potential patterns that we can enter a short on, a potential pattern that we can enter a sell on. So in this case, one pattern that we spotted ahead of time was a head and shoulders pattern. How did we draw this? We connected the first low, then we connected the next high, then we connected the next low, and the next high, and the next low, and then the next high, which is the right shoulder, and then we finished the head and shoulders pattern off. Now, once we have our head and shoulders pattern, because this is a reversal trade, remember, as I mentioned, you can have continuation patterns or you can have reversal patterns. And since this is a reversal pattern, we need to look for a candlestick confirmation. Why? Because if you're going against the trend of the market, you have a higher chance of hitting stop loss. So to prevent ourselves from hitting stop loss, we're looking for candlestick confirmations to give us an edge to make sure we have a high win rate. So we noticed the market had trouble breaching this area right here. We saw a lot of wick rejections, a lot of bearish type candles, and we saw a shooting star candlestick formation, and then we saw another bearish candle. That was our signal to enter a short, and we put our stop loss above the previous wicks, and we did a simple risk to reward ratio of 2. Very simple, very straightforward. You can do this on any time frame, and the more you practice, the better and better and better you'll get at spotting these patterns as they're forming. And notice this first way I showed you how to enter your trades doesn't need any type of technical analysis that requires any zones, any support and resistance, or any trend lines or fibs or any of that stuff. It's very simple, very easy way to find your entries just based on price action and based on candlestick confirmations. Let's move on to the next one. So in this case right now, we are looking at gold, XAUUSD on the daily time frame. So what do we see here? We see the market has created what's called a double bottom. So we can go ahead and mark this as a potential zone. Notice in this second way I'm going to show you how to enter trades, we're going to be using technical analysis. So we're going to be using either trend lines or zones or support and resistance, key levels. We're looking at areas in the market where the price might react. And because we're using technical analysis, because we're using zones, in this case, we necessarily don't have to wait for any candlestick confirmations. We're able to get a little bit better entries. And especially if we're not going to be waiting for any candlestick confirmations, it is a wiser idea to go ahead and trade with the trend. So in this case, the market was trending down. But what do we see here? We see the market has created a double bottom. So now we kind of have to see like what the market is going to end up doing here. So the market is having trouble breaching this area. It has essentially created what's called a triple bottom, and the market is going back up. This is a very bullish candle. So at this point, we need to at least mark up our zones because we're going to be entering using technical analysis. And in this case, we'll just be entering using support and resistance. I see a potential resistance area right here that I'll mark out. And then also right over here as well, we have another area where the price had trouble breaching in the past. We're going to be using these areas as guidelines of where the price might be reacting in the future. Because what technical analysis does, technical analysis allows us to look at past price action history to gauge where the price might be reacting in the future. So if the price once had trouble breaching this area, the price might have trouble breaching it a second time. The price had trouble breaching it here. Price might have trouble reaching it a second time. But in this case, instead of looking for reversal trades, we want to be trading with the trend because it's a little bit safer. So here is the second way to enter trades. We'll go ahead and let this continue to play out. Okay, so the price action is extremely bullish here. And the way we enter these zones is since it breached that zone, the way we would be entering this trade is we would be waiting for the market to do a potential pullback. Because if the market does indeed do a pullback, this would be the perfect time to enter a buy, because we want to be trading in the direction of the momentum. If the price action is now moving high, notice the last high was lower than this new high, meaning this new high is higher than the previous high. So this is showing a potential sign of an uptrend. So what we can do here, since we have our zone created, we can enter what's called a buy limit. What does this mean? This means we're going to go into our trading app and we're going to set a pending buy order to automatically buy gold if it reaches 1,730.95. And then stop loss should be below the zone. And our take profit, we can either do one of two things. Number one, we can do what we did last time, which was a 2 risk to reward ratio, stop loss versus take profit, a 2 ratio. Or alternatively, since we're using price action, we can go ahead and make our take profit on the next zone. Why? Because the price action had trouble breaching it last time, so it could potentially have trouble breaching it a second time. So this is how we have our trade set up. So if the market comes back down, our trade is going to get activated and we'll be off to the races. So the trade got activated and our take profit is a little bit conservative. We're not going to put our take profit as high as this previous wick was. We're not going to put it past the previous wick. We're going to do a little bit more conservative. We're going to put that take profit a little bit below the actual zone to ensure that our take profit gets hit, to give us a higher probability. So the take profit got completely smashed. So now we see here the same exact things happening. We have this zone that we created. So just like what we did down here, we're going to do the same exact thing. If the market has a retracement, or in other words, a pullback that reaches this zone again, we're going to be looking for a potential buy. We're going to be in the market, in the trades, in the direction of the trend as a continuation pattern. Right now, we're using technical analysis. We want to be trading with the trend as a continuation trade. So what we can do, same exact thing that we did last time, we'll go ahead and put a potential buy limit. And we want to make sure that we have our stop loss below the actual zone. So let's go ahead and continue. Okay, so same exact thing here. Just like we've been doing, the market has trouble breaching this area here. So we'll go ahead and draw another support and resistance area, another key level. Okay, this trade now got activated, and just like we did here, our take profit was at the next level. We do the same exact thing here, put our take profit at the next level. Okay, that take profit got smashed as well. So in this first trade, we had a risk to reward ratio of 6.4. We netted 675 pips. And in this trade, we had a risk to reward ratio of 10.5, and we netted 1,312 pips. And by the way, guys, if you guys don't know how to calculate pips on gold, notice this says 13,000, but I'm telling you 1,300. If you guys don't know how to calculate pips, I did release a video on how to calculate pips on gold. If you want to watch that video, there's a link right above my head, and I'll even put the link in the description as well. You can watch that video after you're done with this one. So here's just a couple examples of continuation trades using technical analysis. And notice, since we're trading with the trend, we didn't really have to wait for any candlestick confirmations, which was able to give us a much better risk to reward ratio. Same thing with this one. But if you want, you can wait for candlestick confirmations. You'll have a little bit worse of a entry, but it could give you a higher win rate overall. Okay guys, now here's the third way to enter trades. This is going to be a little bit more advanced. We're going to be putting everything together to give us a much higher probability that the trade is going to go in our favor rather than hitting stop loss. So let's go ahead and talk about what we see here. So we're going to be combining multiple different things. So the first thing we see here is we are currently on the daily time frame on USD JPY, and what's happening to the lows and what's happening to the highs. We can see that this low was the lowest point that we see in the market, and then this low was a little bit higher, this low was a little bit higher, this low was a little bit higher, and this high is a little bit higher than the previous high. So in this case, the market is trending a little bit upwards, but we don't have enough information to find an actual entry yet. A newbie trader would just enter anywhere, but as professional traders, we're not looking to jump into the water, but instead we're looking to fish, and we're waiting for the price action to come to us, to come to our entry, to give us, number one, a good entry, and number two, a high win rate. So let's go ahead and see what we can find here. So let's go ahead and zoom in to the 4-hour time frame, and we'll go ahead and allow the market to play out. Okay, so we can clearly see that the market is trending upwards. So we can actually go ahead and even draw a trend line. So we'll draw a trend line connecting all the lows. We want to include the wick of this. We want to make sure we include this. We want to touch all these different wicks here. We want to try to touch as many points as possible. And most importantly, we want to make sure we extend this line into the future, because we're using these technical analysis as points where the market might react in the future. And also, what else do we see? We see that the market is having trouble breaching this area here. So what we can do is we can draw a zone of interest. We can draw a support and resistance area. And we want to do the same exact thing that we did with gold. We want to trade with the trend. In this case, the trend is trending upwards. So in this case, we would want to wait until the price action breaches this area, pulls a retest. But in order to increase our chances, we would ideally want to enter the trade somewhere in this intersection, somewhere where these two areas are overlapping. So this right here is our green zone. But let's go ahead and continue to play this out. So the market did indeed breach that, which is good. We're waiting for a high probability setup based on this confluence here. And as we're using technical analysis, I'm going to see if there's any other technicals that we can use. We can even try to do a fib. We can draw either a fib from way down here to the top, or even from this last swing low to the most recent swing high. So if you draw the fib from this last low to the high, let's see if that does anything for us. We do see the 50 fib is intersecting this area as well. So this area is looking pretty decent for a buy. Again, we're trading with the trend, so this is a continuation trade. So to increase our chances of winning this trade, we are looking at price action, which we saw the price action is bullish. We're also looking at technical analysis. We found some technicals. We found an area where multiple technicals are overlapping. And number three, we can look at any candlestick patterns to give us our entry trigger. So this time we'll be a little bit patient and see if everything lines up in our favor. So at this point, the price action is still bearish. The candles are all still red, but we do see a lot of wick rejections. All we're looking for right now is just some green candles and a bullish candlestick confirmation. I'll go ahead and delete the circle to make it a little bit easier to kind of see what's happening in the price action. Bearish as well. Our first green candle. Okay, this is a very bullish candle. Notice this was our first green candle, this is our second green candle, and this extremely long wick is showing us that the sellers initially had a lot of pressure, and then the buyers took over, and now this candle is bullish. This shows a sign of reversal. So now we will go ahead and enter our buy on the next candle. Where do we want to put our stop loss? We want to put our stop loss pretty much where it is. We want to put our stop loss below the lowest wick around this nearest area. And what should we do with our take profit? I see this zone right here, so we can mark this as a zone as well. This will give us and again, we don't want to put our take profit in the actual zone. We want to be a little bit conservative. This will give us a decent risk to reward ratio of 3.8. So almost 4 risk to reward ratio. So we'll go back to the 4-hour chart and just see this play out. Okay, so the trade hit take profit. So just to kind of recap what we did in this scenario, we first looked at price action. We noticed that the price action is now creating higher highs. Then we noticed the price action is creating higher lows. This gave us a sign of bullish momentum. So not only did we wait for the price action, but now we're also including some technical analysis. What do we do with our technicals? We drew our trend line. We got some confluences that the trend line lined up with this zone that we drew, just like I showed you on the gold example, waiting for the price action to breach the zone, pull back, retest it, and along with that, we're using other technicals such as a fib, and it lined up with the 50 fib. This gave us a very good area to enter a buy, and just because we wanted to have a very high probability trade, we didn't just blindly enter on this confluence area either. Even though we had all signs to point towards a great buy, we want to be a little bit more safe, a little bit more conservative. We waited for the candlestick confirmations. We waited for these bearish candles to weaken and look for some signs of a buying pressure. That's when we saw this first green candle. We saw the second green candle that gave us our signal to enter the buy, and then we were off to the races, making sure our stop loss is always below the previous low, and in this case, our take profit was at the last rejection point, giving us a risk to reward ratio of 3.8, netting us around 333 pips. So I hope you guys found this video helpful. If you did find it useful, go ahead and drop a like. It really helps the channel grow, and it really motivates me to continue making these videos completely for free for you guys. And if you did find it helpful, drop a comment down below of what your biggest takeaway was of today's lesson. And for those of you who are looking for some hands-on help, want some personalized mentorship, maybe you're looking for a little bit of accountability, there's a link in the description of our Market Makers University private coaching program. We have a very strict selection process of the students that we work with. So if you want some information about our private program, click the link in the description and all the information will be on our website. That being said, take care and I'll catch you guys in the next video.